Okay, welcome to the weekly review. We will look at NASDAQ delivery for the second week of February 2026. Before going ahead, let's look at the daily chart. Yesterday, we discussed that we have a bearish week, and on Friday, we went in back in range, but we also created this daily suspension block, and I would expect the price to either go up, take support, or get rejected from here and go down, and that's exactly what happened. On a daily chart, we see the daily suspension block. We anticipate week to open high, low, close. Why? Because we have a bearish suspension block created that will try to send price lower. So if you see over here on Monday, it opens high, and then Tuesday takes out Monday high, gives us a bearish candle telling us that it might want to go in the downside, towards the downside, and then Monday, Tuesday, on Wednesday we take out the low of Tuesday and high of both the previous days, and then on Thursday we go up until the top of the suspension block, go down, creating this gap. On a Friday we go down and come back in range. So on Wednesday we had NFP, and on Friday we had CPI. Let's go to Monday. 1 hour chart. We had this important fair value gap mapped out here before the Monday trading day, and we had this opening gap for the week. We came down during the market open time, and then we went up, making this fair value gap here when we crossed this price level. Let's look at the 5-minute. So Monday opens low, makes relative equal highs over here, went into this important fair value gap over here, which was my point of interest at that time. We made a low in that, and I would anticipate the price to go down, take out this low that was made in my point of interest, so that it can tap that point of interest again, and I can take a long entry. I have added notes here. Market open, takes it out and taps into the important 1 hour fair value gap, and we then take out the previous day high. Go down to 1-minute chart to see what we could have done. Now, if you want to take a trade, you have conviction on your model, you know that whenever price goes into an important fair value gap, you can take a trade. That's exactly what happened here. So if you wanted to take a trade, you can take a trade from here or this fair value gap that was inverse towards this place. But as you can see, we missed London high before our time of interest, which is 9:45 to 10:15. We go back into the first presented fair value gap, and I would anticipate price to show rejection here and go up to show support here and go up towards the London high, because this looks like a suspect high, which would be what an engineered high before the London high over here. We could have taken this trade, and then after that we could have taken this trade if you were looking outside the macro, where because from this range to this range we have this discount fair value gap. We take it out, and then we take this low out, tap this fair value gap, and go back up to previous day high. So this is how Monday looks. Let's go to Tuesday. On Monday we made this fair value gap, we took support on it, went up. This is why this is an important fair value gap. We made this fair value gap, which is just there where it's not showing so much support, so it would not be considered an important fair value gap. As you can see here, during our time, we took support on that same fair value gap and rushed up, took out the previous day high. Looking at the 5-minute chart, we made this high before the market opened, just before the previous day high, which makes this a suspect high, and it's an engineered high. For retailers, this would be a resistance zone. For us, this is an engineered high, so we would have to target it. Okay, at here I told you that whenever a low is made into over important fair value gaps, that's a suspect low. So Asia low made an important early fair value gap. We take that out when the market opens, and then it rallies up, taking out this high, and this previous day high. Let's look at a 1 minute. So on a 1 minute, I traded that day. I did it the day before as well. We made this suspension block over here, and we took out the Asia low, which was our suspect low. We made a high in it over here, and then we made a low over here, and then we close above, which makes this an order block and this a breaker. We could have entered over there, or as soon as the candle closed, targeting the previous day high, because it was right next to the engineered high. This is our inverse fair value gap, which gave us another opportunity during 11:45 to 12:15. Now if you are just looking at this time, we went up, took this out. As soon as we take that out, we can target the nearest fair value gap, which is this, which is untapped. Look at this. Made a low over here, first presented fair value gap, just before the first presented fair value gap, went up, come back, taps it again, and taking out this low. If you were trading at this time, if I was trading at this time, I would have taken this fair value gap out because it's an important fair value gap that took out the Asia low. I would extend that, or because it's aligning with this fair value gap over here, but it did not tap it, by the way. So this inverse fair value gap on the top of our hourly fair value gap, and then we see a rally again towards these equal highs. Wednesday. On a Wednesday, I am still moving that blue fair value gap towards the right side because it's still an important fair value gap. But as you can see, on Wednesday, we open up, the market opens up, takes out the previous day high, and then dumps. What happened on that day? It was NFP. So we open low. When the news drops at 8:30, we take out Asia and London high, go up, take out the previous day high. And then by the end of the day, we go back and we take the low of London. Now, why would we target this? Because this low is made at a very important place, which is this big new week opening gap. So it makes it a suspect low, which means that the price will come back to it. Okay, so on Wednesday, we had NFP. We made this data low, and at 8:30 we rushed up and took out the previous day high over here. We took it one more time at 9:30, which was open high, which set up the market to being bearish for the upcoming hour at least. Yeah, at least look at this, 9:30 to 10:30, and then it goes up. So one possible entry at this point would be over time of interest and Q taps or a block, and if you're confident in our idea, this is the ideal entry right over here. If you did not enter here, we have a change in state over here, made a fair value gap, and we did that on the multiplication block. We could have taken an entry towards the London low. At 10:30, we had a change in state of delivery over here, mitigation block, fair value gap, and we could have went up to measuring gap. What is a measuring gap? When we make a high and a low, the fair value gap that is made in the middle of it is called the measuring gap, and mostly price goes up to it. So these are the two fair value gaps that throughout the week we used, and on Thursday we are here. We inversed that important fair value gap and we went towards this second fair value gap. Let's see what happened. Thursday opens and consolidate, which indicates a bigger move at open. Thursday makes high on the high of the daily suspension block over here. This is the top of the suspension block. Fails to take the previous day high while ES does it, and we make an SMT with ES. Dumps down, inverse the important fair value gap, go down towards this gap, weekly opening gap, and then towards the previous day low, which is right next to the important fair value gap that we were talking about. On a 1 minute, what can we see? We see market opens, take out this 1, 2, 3. These are all relative highs. It takes that out as soon as the market opens, and we have a change in state of delivery over here, which is a breaker. Why? You have a high over here, a low, a higher high, a lower low. This makes this a breaker. We could have entered on that breaker right over here, or the next fair value gap in this breaker. The price can get up into this fair value gap. We have to give it a window. That's why my stop is above here. We can enter here and target the previous day low or Asia low over here, whichever you can afford to take. After that, I did not see any setup here. I did take a small short on this day, and but this is the ideal setup. In my weekly reviews, I talk about the ideal setups that we could have taken. The reason is that if we look at our weekly reviews and all the setups that we could have taken, that gives us encouragement and more knowledge for hindsight. What do we mean by hindsight? It means that whenever something has happened, right, and we look at it, we are like, oh, we could have done this, right? But if we do that again and again and again, we start seeing it before it happens. So in hindsight, it looks like we could have taken this setup, but in reality, we might not have taken it, right? But if you keep studying this, you can take these setups in the future. Let's go on Friday. Friday, we made another fair value gap right next to our important fair value gap. Now, why is this important? Because we took support here, made a swing high in that fair value gap. So that means we can come back and take that swing high. We went down, took out the previous day low into this another important fair value gap, made a low and went up. On a 5-minute chart, Friday opens lows, anticipate a bullish day because of huge bearish run before. The previous day was a huge bearish run. We anticipate some kind of retracement back. We make an Asia low, we make a London low right before the market open, and we have to realize that today is CPI day as well. We make a London low in our fair value gap, so this makes this the suspect low, and we take it out. Market open, takes out the London low, and we go up towards the Asia high. These are the Tera highs right over here, Tera low. We make another high, engineered high before that, and another engineered high. We rush down, taking up this low. At this point, the stops are here. These are all engineered highs, making it what? A resistance zone. So that means the retailer thinks that we are going down. But what happens is that we take this low, taking out the buy stops, and then we inverse. This is where we enter, going towards the sell stops. We take those out, make another engineered high before the Asia high, come back in range, 50% of the range over here, go up, take out the Asia high. But this was the only valid setup for me, which I took that setup. I think I posted the video as well. So this is it, and as always, thank you for watching. I wanted to attach the link to PDF in the description last time, but it wanted me to do some verification, but this time I will add it. I'll see you then.